Hi, and welcome to the inaugural episode of the ICIFA Investment Show. We are here to showcase investment products that are available in the region and also look at professionals that you can reach out to when you want to invest and don't know where to start. I am so excited to be here. My name is Rena Hicks. I am the Operations Director at FAIDA Investment Bank and a member of ICIFA, Institute of Certified Investment and Financial Analysts. And I am joined by the chair of ICIFA. His name is Einstein Kihanda.
Thank you very much. Glad to be here.
Karibu. Einstein Kihanda is the Chief Executive Officer of ICA Lion Asset Managers, and he also happens to be the chairperson of ICIFA and a member, obviously, of the ICIFA. Thank you so much for this work that you're doing and for the cause to educate members of the public on how they can invest and also showcase professionals that they can reach out to.
Thank you.
Yeah, so I want to begin with my first question. You know, it's been a very difficult season. You know, just generally COVID, the economy has not been doing very well, the weather is not doing too well. There's so many issues around the economy that we have faced in the recent past. And a lot of people are just like, look, I don't make enough money to even start thinking about saving. So when you start talking about investing, you've lost me. Question, how can somebody in a situation like that even begin to invest?
Thank you for that question, and it's a very pertinent question in our current circumstances. But I think one, why investment? Why it's important to think about investment is that investment is about the future, and just to get back to the question that you asked in terms of the context of season. Yeah. So seasons come and go. Seasons don't last forever, and as an economy, we have faced different difficult challenges and situations. And even if you go back to history, because I love reading history, and you will find that the world has faced many challenges. The current one of COVID, if you go back 100 years ago, we had the Spanish flu and they had all that impact. And we went over it, we came over it. And so I also firmly believe that we will get out of this situation right now that we are in, because we are now focusing on issues of vaccination. We're no longer talking about locking down the economy. And therefore, there are opportunities. It is important to look at investments. Why is this the case? Because one, it is clear that there have certainly been sectors of the economy that have struggled and others that have thrived. And so why consider investments? Because you need to think about the future. Once we are out of this, what are you going to be doing? How are you going to ensure that you're able to earn a return on your investment? Now, the second aspect of that question is, how will I get the income to even start thinking about investment?
Exactly.
And this is where you now talk about issues of managing your income within your circumstances. Okay. Because investment is really about trying to see how you can get some cash or some investment. You can make some investments out of the current income that you have, and therefore you have to have some savings of some sort for you to be able to do that. And so, difficult as it is and challenging as it is, I think it is important to think about investment, because once we are out of this pandemic situation, you will be able to also make a return based on the kind of investment that you make, whether it is in a business, whether it is in shares, and I think we'll be talking about that later on. But I think to answer your question directly, there is never a season where you cannot make investments. Any season is a good season for you to make investments, because if you look at entrepreneurs who have thrived and succeeded, they have made difficult decisions in very challenging circumstances, and they have been able to emerge out of those and continue to succeed.
So despite the cycle, just invest and keep investing.
Keep investment. The consistency is what is really important. And again, if you look at the track record of successful investors, they have been able to do this in season, out of season, and that ensures that their investment portfolios continue to grow. The most famous investors are, people talk about Warren Buffett, who's a seasoned investor. He's been investing very many years, and he's famously quoted as saying he invests when there is blood on the ground, when things are very difficult, and then everybody is scared. And at that time, once we are out of that season, he will emerge tops and you'll see, significant investment returns. So I think it's important to focus on making investment decisions, whether the investment environment is challenging or not.
Okay. Yeah. So there's someone listening to this and they're convinced, they're like, sawa, I want to start. I'm one. Where do I begin? How do I start?
I think the starting point is, one, what is your investment objective? What are you seeking to do? And as I said, any amount of money is good enough to make investment decisions. The reason I say this is because, fortunately, over the years, our economy has grown in terms of sophistication to a level where one can make reasonable investments with small amounts of money, even less than 1,000 shillings, and be able to consistently grow that investment portfolio. That wasn't the case a few years ago. So the starting point is, start with what you have. What you have is good enough. And therefore, for instance, if you look at unit trust and collective investment schemes, they can be able to enable you to make investments on a continuous basis with small amounts of money. And because of the fact that they are even digital products now, you can even invest in amounts of 100 shillings, 200 shillings. And so for me, the principle that I would advocate is start with what you have, however small it is. And I think with investments, the benefit and the discipline is what is really important. That consistency of making that investment decision and seeing it grow over time. It also gives you confidence, because at the end of the day, what it also means is that you are setting aside funds that will enable you grow and that will even enable you earn an income in the future. So I think the starting point is using the amount of money that you have, because that will also help you set up a base that will then propel you to consistently grow that investment portfolio. And I believe a lot of the viewers of this program are young people. And so from my experience, I can tell you, if I knew what I know now, there are decisions I would have made that I would have been much better. And one of the challenges, or one of the inhibitors, was that thought or that perception that an amount of, that you only need to invest when you have significant amounts of money in the tens and the 20s and the 50s and hundreds of thousands. That is not the case, because you can actually be able to make investments that are of small amounts of money, but when done consistently and with discipline, will be able to achieve results over time.
Awesome. Yeah. So start where you are with what you have, and there's a product available for you. So now I want to move into what are those examples of products that people can consider, especially when they're like, I'm not sure whether, we're going into an election season, we're still going through this pandemic, vaccines are not being rolled out as fast as we expected, in a season of uncertainty. What are some of the examples that you would give for somebody to consider that they can invest in with not too much money? Okay.
I'll start with the one that probably people know a lot about, or that is in the public domain, the stock market, for instance. In the stock market, you've got companies listed at the stock exchange. You can be able to buy 100 shares of a particular stock. And depending on I don't want to go into the specifics of which counters, but there are different sectors of the economy that are represented at the securities exchange. And I mean, if you're in touch with your broker, who can also be able to give you advice in terms of recommendations of possible investments in stocks, that can be one area that you can start off. And I'll just take you back to last year.
Okay.
Because when you look at last year and the pandemic situation that we faced, it had the effect of significantly bringing down share prices. Because if you remember, in March, immediately after the government, the president announced the fact that we had the first case, there are various measures that were taken by the banks with the support of the central bank, banks restructuring their loans. And of course, we started seeing reports, the results of the banks being announced, and they were not looking very good. So the share prices dropped significantly. What then happened a year later? With us slowly emerging from the pandemic, you've seen a strong recovery in the stock market. And if you compare the prices that they were last year and where they are today, there's been a significant upward shift. What does that tell you? That if you had some money at that time and you had invested it in the stock market, today you would be reaping very good returns, both from capital gains in terms of the appreciation of the share price and also from dividends. Because again, if you look at the announcements that have been made by various banks and other companies, they've reported dividends.
They have.
And even in those challenging circumstances. So you as an investor would have been a beneficiary of those decisions that are made by those companies. So one I would start is by looking at the stock market. Number two is looking at what you call collective investment schemes or unit trusts.
Okay.
Again, these are pooled funds where investors are able to bring in their money, and the fund managers of those pooled funds are the ones who now make the investment decision. So you can decide to buy into a money market fund that invests in money market securities, an equity fund invests in the stock market, and others that are balanced. And you can invest as little as 500 shillings in that particular unit trust and also see your portfolio grow over time. So as I said earlier on, the situation is such that our market has developed to the extent that there are now opportunities for people to be investing in smaller amounts of money. And when you pool all those funds together, they are able to generate investment returns for investors. So the opportunities are there.
Yeah.
And I think it is upon us as investment professionals to make these opportunities known to the wider public. And I suppose that's why a program like this is useful,
Yes.
because it educates the public about what is available for them as investment products.
Yes.
Yeah.
Okay, so if somebody wants to know, okay, these asset management firms that have these collective investment schemes,
Yes.
or these brokers,
Yes.
where can I find them? There are resources that people
Yes.
can get the information. Perhaps you can share.
Yeah, I can share. Yeah, that's a very good question. So number one, very important, all these institutions are regulated. They are regulated by the Capital Markets Authority. So for instance, if you go to the Capital Markets Authority website, you'll actually see a segment on licensees, institutions that are licensed by the Capital Markets Authority. And you will find investment banks, you will find brokers, you will find fund managers. What this basically means is that these institutions have met the criteria that has been provided, that has been listed by the Capital Markets Authority, in order to ensure that they are credible institutions that can provide investment services to to investors. That means they have the necessary capital, they have the necessary skills in terms of the human resource, they have the necessary systems and structures to be able to receive money from investors and invest on their behalf.
Yeah.
So, and this is very important because of protection. It protects the investors, knowing that they're dealing with a credible institution, and that if anything ever went wrong, they have reference. They can actually go to the regulator and actually state that, I invested my money with this company and they're not treating me very well, and therefore the regulator has oversight and can actually take action on that institution. So I think that is one very important factor that investors need to look at. Make sure that you're dealing with an institution that is regulated, because otherwise you can lose your money and you have no recourse, if anything went wrong. Yeah.
Fantastic. Thank you so much, Einstein, for these questions. Guys, I now want to move into a segment that we created called Ask Your FA, like literally anything. And so what we did, we sent out an alert, a poster, and said, send us questions. And we got this question from a viewer. Check this out.
Good morning, ICIFA. My name is Marilyn Gloria. So I have my questions here. One is, what are some of the investing tips for an individual with an unsteady income? That is one. Two, what are some of the investing strategies for an individual who intends to fully maintain his lifestyle using his investments only? And we're looking at a case whereby this person doesn't have other forms of income, but considers these investments as some of his sources of income. So are you able to maintain a lifestyle, but still be heavily dependent on the investments that you've set for yourself?
Thank you, Marilyn Gloria, for that question. Actually, there were two questions, so I'll get you to answer the first one. Marilyn is asking, for someone who has an income that is not regular, how can they invest?
I think that's a very good question. Yes, you can still invest. The thing about investments is that there are no restrictions if you're not investing consistently. The reason is there are no penalties. For instance, if you are investing in whatever product it is, I gave examples of the stock market. I gave examples of the collective investment schemes. You see, the way they are structured as investments, there are no penalties for not consistently making your investments. So you can actually make your investments based on the available cash that you have. The thing about it is to have the discipline to make those investments when the funds are available, and that will ensure that you at least make use of the resources that are available to you. So I think it's not like an insurance policy, for instance, where you have a policy and you're expected to make premiums on a consistent basis, and if you don't pay those premiums, then there are penalties. That's not the case with investments, because the kind of investment products that we're talking about are really based on the availability of the cash that you're making. So it is of course it is advantageous if you're able to invest consistently, but the fact that your cash flow is not consistent does not inhibit your ability to make those investments. So the products that I've talked about are available, whether your cash flow is steady or unsteady. That should not make you discouraged. I think the thing is to bear in mind that when you have the funds available, then you make those investments as and when they happen.
So then her second question was around using investments to support your lifestyle. How can you invest in things that then ensure that the lifestyle you want to live is possible?
Again, it is very possible, and I can give you from example from my many years of in the financial services industry. I can tell you there are very many people whose lifestyle is sustained by the investments that they have made over time, and here is how. You see, using the examples I have given. Number one, if you invest in shares, for instance, depending on the consistency that you have made those investments, you see, when you invest in shares, number one, there's something called capital appreciation. The share price goes up. Number two, there are also what you call decisions that are made by the businesses. For instance, they issue bonus shares. They may decide to pay dividends in the form of shares, or they may actually pay off the payout on an annual basis based on dividends. And there are people who actually use those dividends to sustain their lifestyle. And depending on the size of those, on the significant amount of money they have invested in those shares, it can be sufficient enough to actually enable you to sustain yourself in a very comfortable way. Again, I have also seen cases where people have invested in unit trusts, and they may even decide, for instance, you can invest in a money market fund, and you decide that I have a capital amount of money that I want to place with you for investment, and all I want from you is that you pay me interest on a monthly basis. So it's actually like a salary. And I can cite many examples of people I have seen who do that.
Oh, so you can set it up that way?
Yeah, you can set it up that way. So for instance, in a unit trust, you can decide that when because unit trusts pay credit interest to the unit holders every month. You can decide that my interest will either be rolled over or paid out to me in cash. And we see this in many people who have retired. So they retire and they decide that the lump sum that I receive, instead of spending it, I'll put it in a unit trust, and then the capital remains, and every month I get an interest, and that sustains my lifestyle. And that is very possible with investments. And that way, first of all, you retain your capital, and number two, you're able to continue, instead of spending that lump sum and you have nothing to show for it, you are able to actually earn regular income. And that can sustain you for a very long time. So it is actually possible for you to do that. In fact, that I would say is the optimal. I would say is actually something that would be an investment objective or a goal that one can set themselves for and say, you know what, I want to make sufficient investments that will sustain me, in retirement. And that is what you would call financial security. Yeah. That your investments are actually the ones that are sustaining your lifestyle.
And I guess the idea here would be to try figure out what is that amount of money I will need 35 years from now, 25 years from now, and then work backwards to see how much then do I need to save daily so that I can get to that place where when I invest this amount of money, I'm able to get an interest that supports me every so often.
Exactly. And that is why, again, returning to my point about young people, to tell them that it is possible for you to plan now what income do you want in the future. At a particular point, maybe you're probably 25 and you'll retire at 55 or 60. You can actually set yourself based on even on inflationary trends and actually plan your way such that by the time you achieve that retirement age, you have sufficient investments to sustain you in retirement. It is actually possible, and it's done, and I've seen it happen.
And you know, guys, the beauty about this is that you don't have to do these workings on your own. We have professionals in the industry you can sit with. We can do projections and figure out, okay, what does that look like for me? I'm not 25, I'm 32, or I'm 27. You know, we can sit down and help you figure out what is that number for me, and work backwards and figure out what investments should I get into and what should I do with my money. Please subscribe to this channel because we are showcasing investments and professionals that you can reach out to help you with your investments. I want to then now introduce a new segment, which is our third and final segment of this particular episode, and it is Get to Know Your FA, where we learn about the journeys a lot of these financial advisors and experts have gone through in this industry. Thank you so much, Einstein. It's such a pleasure to have you on the show, and I hope to see you again. You have so much knowledge and experience. I hope that we'll be able to host you soon.
Thank you very much. It's been a pleasure.
We did. Who said more money? We did.
Nani?
DigiTrust. Powered by ICIFA Lion, a first-in-class online portal that allows you to invest in a money market fund so that you can start to reap more money. And more money. And more money.
I want more money. Who can use this DigiTrust?
Everyone.
Even me?
Yes.
And me?
And me?
Na mimi?
Me?
Me?
And me?
And me?
Yes. Everyone. Except you, goat. Visit invest.icefalion.com and with as little as 500 bob, get started. Anza Sasa, DigiTrust from ICIFA Lion, adding value to your money.
Welcome to the Know Your FA segment, where we get inspired by renowned fellows and members of ICIFA who have made a mark in the investment and finance industry. I'm FA Diana Muriuki Maina, the CEO of ICIFA. And today we are honored and privileged to be joined by member number 001, who is also a fellow of the Institute and the first chairman of ICIFA. He's none other than FFA Nguru Wachira. As I mentioned, he was the first chairman of ICIFA. He's also the chairman of the disciplinary committee. He's also the founder and chairman of Unlimited Profit Limited and WIA East Africa Limited. I think we need to get a lot from him. We need to get inspired by him. And welcome once again, FFA Nguru Wachira. We'd like to hear more about your story and your journey specifically in the investment industry.
I started working on my own in 1979. That was soon after President Moi took over office. And for the period that he was president, there are certain achievements that definitely were made. But one thing is that people were not given the freedom, the liberty to explore, to pursue their own ambitions. And there are a lot of crises that occurred that actually should not have occurred if that freedom was there. And then, of course, we had this clamor for multi-party democracy with the first multi-party elections in 1992. And then, of course, the change in the political party leading the government in 2002 when President Mwai Kibaki became president. Now, it's just at about that time that ICIFA was being pursued, liberalization was being embraced, and the opportunities that we saw were supported by a universe that was converging to make Kenya a great nation. So the Capital Markets Authority decided that it wanted to train a cohort of people who would be instrumental in making the stock market more vibrant. The NSE also gave us some grant, which helped us in the beginning. And as we started, we wanted to call ourselves the CFA. And we had some problems with the CFA from the US, making us change so that we registered as AFA, Association of Financial Analysts. We've gone through a number of transitions, changing names, until eventually we have got ICIFA, which I believe is the brand that we are going to live with for the foreseeable future. During our earlier struggles, a lot of people whom we started with gave up hope, and there are few who remained committed. My own suggestion to the young professionals is that wealth is created. Let's not be confined by the wealth that is there at the moment. Mm-hmm. We've got to create wealth in order to participate. And, we observed, the GDP for Africa is, let's say, $3 trillion. The GDP for Africa should be about $28 trillion on the basis of the resources that it commands. We should look at this as an opportunity rather than as an aridity or a desert. There is a game called golf. It's a very intense game, in my own view. It's a game where you never say that you are really an expert. Mm-hmm. It's a game that can make you use 4-letter words. Mm-hmm. It's a game where you are able to fairly quickly judge the people you are playing with. I think that we all want to have a fulfilling life. Mm-hmm. And somebody said that if you love what you do, then you are on vacation throughout. Mm-hmm. At my age, I can't be paid for being good in golf. But what I know is that it's a very, very intense game. And for most people, once they start playing golf, they seem to get it as an addiction. But it is not an addiction, it's that it is something that is lovely to engage in. And again, if you take your integrity to the game as well, it shows. So that even the people that you are playing with do judge you and say, I think this is a reasonable person. This is a reliable person. This is a person who will tell the truth, even though it might be painful. It might hurt at that particular time. So it gives you an opportunity to interact, with people who are successful, with people who are leaders, and the people who are then free. Yes, an opportunity that you may not get in any other kind of interaction. You might be able to get it in golf. First of all, one from The Richest Man in Babylon, the book by the richest man in Babylon. Save 10% of all that you earn. That 10% is not to be spent under any circumstances. As that 10% grows, it changes your architecture because you own everything that you save. Everything that you spend is income to somebody else, but the 10% that you save remains your money. 2, you create the future. Paraphrasing from Drucker, the future that you want, you create it. So you must invest in creating that future. So save at least 10% of all your income. It changes your infrastructure. You can be able to stretch the 90% to meet everything else. Wow. And you create the future that you desire. I think, in other words, he said, be the change that you want to see.
So, ladies and gentlemen, this is the end of our the inaugural show or episode of the ICIFA Investment Show. Please subscribe because there's a lot more coming. Ask your questions. We have our social media channels indicated at the bottom of the screen. Subscribe and ask questions. Ask any questions that you want to ask, because we have the entire industry of professionals ready and willing to answer all your questions. We want to move our savings and investment levels of this country and the region to the next level, guys, so that we can all retire comfortably. Have a wonderful day, evening, morning, wherever you are, and God bless you. Take care.
On the next episode, we discuss investing in stocks with FFA Nyambura.